Let's assume that a corporation owes $2,875 to the government in income tax. In the year related to the tax assessment, we record a $2,875 credit entry under revenue in taxes on income, profits, and capital gains, and an equal value debit entry under net acquisition of financial assets in other accounts receivable. Given the absence of other transactions, these entries result in a net lending, net borrowing of $2,875. At the time the tax payment is collected, we record a debit entry of $2,875 under net acquisition of financial assets in currency and deposits, and an equal value credit entry also under net acquisition of financial assets in other accounts receivable. Note that the credit entry has a negative sign because it involves the decrease of a financial asset. As a result of the tax payment, the accounts receivable is cancelled after having served as a bridge between when the tax assessment was received and when the tax payment was collected. At the time of the tax payment, there is no impact on net lending, net borrowing, because the impact was already recorded in the tax assessment year. In the second example, assume that the government buys $335 worth of office supplies from a domestic corporation and has 30 days to pay. At the time the goods are received, we record a $335 debit entry under expense in use of goods and services, and an equal value credit entry under net incurrence of liabilities in other accounts payable. Given the absence of other transactions, these entries result in a net lending, net borrowing of minus $335. At the time the goods are paid, we record a debit entry under net incurrence of liabilities in other accounts payable, and an equal value credit entry under net acquisition of financial assets in currency and deposits. Note that both the debit and credit entries have a negative sign because they involve the decrease of a liability and the decrease of a financial asset, respectively. As a result of the payment, the other accounts payable is cancelled after having served as a bridge between when the goods were received and when the goods were paid. There is no impact on net lending, net borrowing when the payment is made, because the impact was recorded when the goods were received. In both these examples, the economic event takes place ahead of the actual cash transaction. But there are occasions when the reverse is true, and the government receives or makes a cash prepayment ahead of the actual economic event. A common example is that of rental payments, which are usually paid a month or more in advance. These prepayments are treated just as in the two examples already shown, with an accounts receivable or payable used to bridge between the time of the cash prepayment and the related later economic event.